Hello traders, Gary Wagner here. Approximately 10 a.m. in Honolulu, Hawaii. It is the 17th day of November, Thursday, and this is the daily report for gold and silver. Gold, silver, S&P's absolutely falling out of bed this morning. Current prints are showing stock market down hard, crude oil down hard. Dow right now down about 170 points, 1720 in gold. Down about $40 plus. Silver down hard. Currently trading 31.72. When we take a look at the dollar index, that's the one interesting market. It is actually higher on the day, but you can see it's an interesting day on the daily charts because it is the open is above the close, but the open and close are above both activities of the prior couple of days. So, turning point, we don't know. But let's get back to what's very important to us, which is, of course, the metals markets. We did get stopped out of our positions. Market trading 1720, that is on gold. We got stopped out at 1735. We took a hit there. Silver also, we got stopped out at 32.90, and when we look at current price, 31.68. So what does this all mean? Realize that these precious metals got literally destroyed sharply lower on a day when the news out there was not all that bearish for gold. For example, the European Union, the sovereign debt crisis, that actually accelerated a little bit today. Bond yields in Spain pushed above 7%. And in other bonds for the UE nations, they also rose. And that suggests, that at least points to the fact that the liquidity, the financial liquidity in the European Union it's evaporating. It's slowly moving away. And you've got France and its financial condition. That was a concern in the marketplace. We have, of course, Italy, and we have, of course, Portugal right now. So what does it mean? Well, you basically had an entire sell-off in the commodity sector itself, in the equities markets, and for some reason, unbeknownst to me, they preferred to move into the dollar as opposed to gold as a safe haven investment. The dollar was slightly higher. Crude oil, much lower today, still above $100, but down over $3. Now, what does that mean for the future of gold and silver? Are we still bullish? Are we bearish? Where are we at? Well, we have to take a look at this. You know, over the last week or so, I have been torn between two possible counts within the marketplace. The first count was whether or not we saw an ABC correction, which of course we did, but the question was, is this all a part of a big A here? And if that's the case, then are we going to witness a large B? And that B could easily be composed of a 3 count. We would have 1, 2, and 3. And this, of course, here would be the end or conclusion of our B. And then what that would mean is that we signaled into a C wave down here. Now, of course, the other side of the coin, or the other possibility that we have been looking at, was that we have just entered an impulse phase. The impulse phase meaning we had an entire major ABC correction, ABC, and that was our A, B, and C, enters into our impulse phase, and in which I anticipated would have a 5 count, meaning 1, 2, and this would be 3. This would have been 4, as you can see on my count, and then we would go into 5 here. Is that still possible? Well, to be honest with you, it is. However, the key is that the fact that we were not able to move above this particular area, 1830, and really anywhere above the 1800s is what I was looking for, that would give us, at least on the surface, a good amount of information that would make that theory quite plausible. However, if the market cannot take this area out, as we've talked about all week, and begins to move lower, at what point do we signal the fact that we are probably in a major C wave correction? The major point in which this upside count would have to be terminated, or at least not complete, is one of the golden rules. And one of the golden rules of Elliott wave counts is that you cannot go into and cross into the area of your last counter wave, meaning 4 cannot go into 2. Here's 2, as you can see, and so far here's 4. Now, here's what's interesting. Right now, they've come close, but they have not actually gone ahead and violated that. They've come right to it, but they haven't violated that. If, in fact, it goes into this count, really what that signals is one of two things. Either this wave 3 is not over. It cannot be over if it goes into this wave right here, this counter wave, or, in fact, we are looking at a continuation of the correction. The fundamentals in the marketplace are so bullish that I found it hard-pressed to believe that we would still go into a expanded correction. At the same time, when you have what would be perceived as bullish news in the marketplace having a bearish influence on gold, all bets are off. The marketplace is not trading in a way in which typical indicators which have worked in the past have 100% certainty. Now, nothing out there has 100% certainty. However, when we see this kind of a meltdown, a $40 meltdown, we're getting a continuation. We're now at 1716. This would signal to me that we possibly are going to continue this correction. This is something we will just have to wait and see. Of course, the reason we place stops in the market is to protect risk if we're incorrect, and the reason we trail our stops up if we're correct is to lock in profits. So there is no crystal ball, but I have to admit that with the fundamental data in the marketplace today and the correlation or the underlying move in the precious metals market, specifically gold, silver, I have more of an explanation for, but specifically gold, it is bewildering at best. And I can tell you that I don't believe that it is a normal activity. But we also have one other cog we need to throw into the mix, and that is we're going into options expiration week. Let's take a look at the silver market. Silver, as you know, I have not had the same bullish bent or discipline or outlook that I did have on on gold. My belief was because it was so tied to the industrial usage with equities possibly under pressure, you weren't going to see that. I also talked about the fact that as long as it couldn't take out $35 an ounce, we weren't going to go and hit our next couple of targets. And I've remained very modestly bearish in this market, although I believed it would follow gold. It certainly is here, but I thought that if gold moved up, silver would move up with it. Now, where can we look for this market to stabilize? And we'll do that with gold before the end of the broadcast. But here's what I'm looking at. You have a 76% retracement level, and that is at 31.90. It has broken that. You can see quite clearly that this market has taken this out. Now, this is a pretty major retracement level. Now, you have one more retracement level, and that's this 76%, which comes out at 30.23. There is no doubt that I believe there's going to be really strong support at the $30 mark. You've got these bands. You've got real good support here. You've got these bands. But you also have, because it's a thinner market, you have these series of lows down here. That means that even though they could find support, it could go down and test these areas intraday. My question is this 31.51 area going to hold? We are right butt up against it right now, and to me, that's the new critical area. The critical area to take out in terms of resistance, $35. The area that I felt was very strong support, 32.90, that's obviously been taken out. You can see this low here, and you can see the close below it. I think that we need to obviously let the dust settle in this marketplace. There is no way that I will recommend us taking a stand until I see some stabilization in the market. But you can absolutely see that we should have some support here, and we certainly certainly could find some support in the area that it is, which is 3167, right in this one band. And as far as gold finding support, let's take one more look at that before we close out the session today. And this is a little bit more difficult because in terms of real strategic areas, and let's go ahead and really blow this down, the really next strong support area is 1690. If it goes to 1690, there is no possible way that we can still or have just entered any kind of a bullish impulse phase, because at 1690 you can see that it goes into this particular area here of our last counter wave, and this, of course, this is our wave 2 right in here. Currently, as I said, we're trading above it. To me, it is critical that we remain above 1700. To remain in any kind of a bullish stance, the market must remain above 1700. 1690 and below takes us into a possible correction. Where would that correction go? It could go lower in terms of what makes sense, 1592, 1602. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the weekly wrap-up on Friday. Bye-bye.